Hello and welcome to this particular module. And I am going to be providing you basically the philosophy behind how your credit score is determined so you can have a clear future from the start in terms of what you should be working on to get a 700 plus and maintain a 700 plus FICO score, because there's no doubt in my mind that I'm going to show you, if you follow the steps in this program, you're going to be able to improve your credit, right? That's a given. However, once you improve your credit, the last thing you want to do is put yourself back in a situation 6 months, a year, 2 years, 4 years down the road where you're trying to rebuild your credit again. All right. So we want to end that type of behavior and change that type of behavior. And the way we're going to change that behavior is by changing the way we think about our credit and understanding how it all works. All right. So just stay tuned, take some notes. I'm going to cover all of this stuff in really good detail. So let's go ahead and get into it. So when it comes to your overall FICO score, credit score, this is how it is determined. So the biggest amount is payment history, which accounts for 35%. Then you have the amount that you owe, i.e., credit utilization, which is 30%. Then new credit, that accounts for 10%. The length of your credit history accounts for 15%. And then your credit mix accounts for the overall 15, last 10%. So these two count for almost, well, together, 65% of your score, like I was saying before. So your payment history, if your payment history has late missed payments or items in collections, then we want to address that in this particular module, where you want to understand, and that's why you bought the templates, is so you can get this payment history cleaned up. But then we want to start building up really good, and if you owe a lot of money, we want to get that down. So I'm going to break it all down just so you understand, but this is like how your credit score is determined. So payment history, like I was saying, is at the first 35%, and the first thing a lender wants to know is something about your credit history, namely whether your credit payments have been made on time. This is the most important factors in a FICO score. So a few late payments are not an automatic score killer. However, an overall good credit history can outweigh one of two instances of late card payments. However, having no late payments in your credit report doesn't mean you'll get a perfect score. Your payment history is just one piece of information used in calculating your FICO score. So really, what that really means, this is coming from myfico.com. Really, what this means is, hey, you need to make sure you get your history in order, i.e., all those negative items that you have in collections. I'm essentially giving you guys a shortcut to get them off. Now, sometimes late payments and missed payments can be kind of tricky. However, if you follow the process in the system, you should be able to get the majority of them removed. All right, but once you've gotten that payment history, all that stuff cleaned up, then we move on to the amounts owed. All right, so the amounts owed is going to be the 30%. So when they look at this particular part, they're just looking about, okay, what's the amount owed on the different types of accounts I have? What's my credit utilization ratio on revolving credit? And let me spend some time right there. So if you have, let's just say, a $10,000 credit card, right? Or you have four credit cards that are $2,500 a piece, and they all amount to $10,000 in what we would call revolving credit. Well, if you're using 9,000 of all the $10,000 of credit that you have available in terms of your lines, well, you have a 90% credit utilization rate, which that's telling the banks and the lenders that, hey, look, man, this person, they're not being responsible with their credit. So, maybe we should, you know, you know lower their, maybe we shouldn't give them any more money. And then also what the credit agency is going to do is start negatively scoring you, because you're obviously not being responsible with that ad. I'm not saying, I'm not calling you out, but I'm just telling you that's what the algorithm is saying. So by rule of thumb, you want to get your and keep your utilization rate below 30%. All right, so if you have $10,000 worth of credit, you don't want to carry over $3,000 on the high end, 50%, but you want to keep it below that 30% because it's going to look good for your utilization. So I'm going to cover some other topics to get that utilization high in this particular course, but that's just something you need to understand. How many account balances you have is also going to take into account how much of the total credit line is being used, like I was just saying, and then how much of installment loans is still owed compared with the original amount of loans. So let's just say you have a loan for $30,000, and you owe 25,000 because you just took it out like a year ago, well, that's not going to it's not going to negatively impact you, but they're going to take that to account if you're trying to get more credit, more revolving things, because they're like, well, this person has this much credit still outstanding, right? So amounts owed is definitely a huge thing to attack when it comes to fixing your credit. So moving forward, if you have to pay down your credit card balances with your opened accounts, do not dispute open accounts. That's, not wise. You want to put a plan of action together in terms of paying that down, right? So, and getting that completely wiped clean. And really, what you want to do is sit down and create some type of cash flow plan, some type of budget. So be sure to look at that video that I have, how to create a budget and savings plan that you may actually stick to, because I walk you through exactly how to get this done. All right. Then we have length of credit history, which accounts for 15% of our overall credit. So in general, a longer credit history will increase FICO scores. So, this is why I was talking about, and you'll see this in other modules I'm going to be covering about the authorized user. But, however, people who haven't been using credit as long may have high FICO scores depending upon the rest of their how the rest of their credit looks. So really what that means is, hey, look, just because you can have new credit but not have like a long history, but the history is going to help you over the long term because it shows consistency to them. Also, your FICO score takes into account how long your credit accounts have been established, including the age of the oldest account and the newest account, and the average age of all your accounts. How long a specific account has been established, and then three, how long has it been since you've used certain accounts. So that's why you want to make sure you're using these accounts, and I'm going to cover that in great detail, how you can use these accounts once you have them established. But they just want to look at to see if this person's the behavior, your financial behavior. Really, this is what all this is calculated is, your financial behavior and your spending decisions, because they want to know whether or not you're going to be a risk, because they want to get their money back. But they also want to make money off of loaning you money. But if you play the game correctly, you can use their money and not pay little to no interest, which is a whole nother different philosophy. But that's the thing behind this, right? They're looking at your behavior, right? Then we have credit mix and use. So that's going to account for 10%. So FICO scores will consider your mix of credit cards, retail accounts, installment loans, finance company accounts, and mortgage loans. It's not necessary to have each one, and it's a good idea to open up credit accounts that you don't intend to use. So many people think that if they have multiple credit cards, that's going to hurt them. Well, it's going to hurt you, just like I was saying, if you use all of them, right? But if you have, let's just say, 10 credit cards or 15 credit cards, and you have a credit utilization or limit of 50 or 60,000, but you're only using 10 to 30%, that's helping you. Right, that's really impacting you positively, because you're playing by their rules. You're showing them behaviorally that, hey, look, I can play this game to win, right? So that's what you want them to see. The other thing is, the credit mix usually won't be a key factor in determining your FICO scores, but it will be more important if your credit report does not have a lot of other information on which to base your score. So you want to make sure you think about that as well, and then what types of credit accounts you have, like I was just saying, and then how many types of credit accounts you want to have as well. And I'm going to get to this at the end of the slide in terms of how you get that epic awesome FICO score, right? And then new credit, which is 10%. So research shows that opening several credit accounts in a short period of time represents a greater risk. That's just what they have seen, because most people, when they open up all these accounts, they may or may not be able to manage those accounts properly. Really, kind of good example in this is when people win the lottery. No, though it has nothing to do with credit, but when people win the lottery, or they get huge inheritances or large sums of money, typically, let's just say those lottery winners, they're broke a few years later, just because they did not understand the philosophy behind acquiring that money. So it disappears. So the same thing you're looking at with new credit. You want to make sure that when you open this credit, you're going to be responsible with it. Also, how many accounts you have. Again, don't open accounts too fast, right? How many new accounts you have, excuse me. And then whether you have, recent good credit history or having bounced back from past payment problems, you will address those in this particular series, in this system, in terms of the past payment problems. But how long it's been since you've opened a new account, they're going to look at that, because you're going to get inquiries for these. The length of time it's been since you, like I was just saying, inquiries were made, and then how many inquiries or recent inquiries you have. So if you have a whole bunch of inquiries, here's the other example I give about inquiries. So it's almost like if you're a good-looking woman, right? And guys, you see a good looking woman. Now, the dudes with swag know there's a way you approach a good looking woman. You just don't you don't go be thirsty, right? You don't want to go and try to be thirsty, but if there's multiple good looking women, and this is really where I'm making the point with this, if there's multiple good looking women in a setting and you try to speak to every single one of them, not in terms of like a cordial conversation, but yo, you trying to show up, then they're gonna start looking at you like, yo, who's this guy? Like this guy's a little bit, and you're coming off as thirsty. That's exactly the same case when it comes to credit. So if you have all these inquiries, whether you're a guy or a girl, for that matter, right? If you have all these inquiries on your credit report, you look thirsty, right? Nobody wants a thirsty person, right? So just think about that in terms of when you have your inquiries, and if you have a lot of them, you want to get those inquiries removed, which I'm going to show you in this particular process. Inquiries can be kind of tricky, but you can still get them off if you want to apply for more additional credit. But that's another thing you want to take into account. And when we come to looking at our score, many people who have a very poor score, they have a 75% utilization rate or higher. Their payment history is below 97%, meaning they've missed that 97% of their payments have not been on time. They have 4 or more items in collections. They have 2 years or less of credit history, and they have 5 or more total accounts that 0 to 5 accounts. They need to have more accounts, and they have 9 plus credit inquiries, right? So this is why people have a poor score, and I can almost, I'm gonna say guarantee, but chances are if you're very poor, you have probably you know 3 to 4 or 5 of these situations, which this program is going to show you how to address, but that's just where it is. Then you have poor, where you're 50 to 75% of your utilization. So just being simple here, right? I'm not going to go through line by line, but just being simple. If you're here, very poor, and you're trying to get to, let's just say, good, right? Going back to the same exact scenario, or even excellent, going back to the same exact scenario, credit utilization, if I have a $10,000 credit card and I'm using $9,000 of it, well, simply put, I need to get that down. Okay, I need to get that down to that 0 to 9% range on a monthly basis. Okay, payment history. Okay, I've missed 97% of my payments. I want to make it look like it's 100%. How do I get between fair and excellent? Well, you want to get those late or missed payments removed completely from your credit reports. Now, sometimes you can't do that, right? So you just have to build up new payment history, which I'm going to show you how to do that. However, I'm just showing you this is how it works, right? Then you have derogatory, marks, right? So again, if you have excellent credit or even good credit for that matter, you're not going to have any items in collections. You're not, okay? Because you're just not. So what are we going to do? You're going to use the Section 609 template to get these items off, get them removed, right? So you no longer have that. Age of credit history. I'm going to cover this in great detail, but again, very poor, or even fair, you're looking at minimum, 5, 6 years of credit history. So when you use the authorized user blueprint that I'm walking you through, you can solve this issue, right? And then total impact accounts, like I was saying before, people who have poor credit, already people between 10 or less, and this is going to sound crazy, 10 or less accounts does not look good, all right? Because you haven't shown the behavior from that utilization standpoint that you maybe can have. I'm not saying it's bad, but it's not really hurting you as well. People who have excellent credit have 21 plus accounts, because it's like it's that old parable. If you can't manage few, you can't manage a lot. So these people are able to show, hey, look, I can manage this, and this, because I'm financially disciplined. So you want to get yourself up to where you have multiple accounts that you don't necessarily need to use, but you have the ability to use, and you move from a need perspective or a need mindset to an abundant mindset, right? You move from a need behavior to an abundant behavior, right? So I'm not going to start, getting into that stuff, but it's really just your thinking. And then credit inquiries. Again, that fly dude or that fly woman, no, they ain't got to go out and do nothing because they already fly, right? So why y'all not sending me stuff, right? So people in this excellent credit score, they hit them up. But when you're thirsty, you got 9 plus. You're like, man, I'm just trying to, I'm just trying to holler at you. I'm just trying to holler at you, man. Hey man, and that's the dude walking. No disrespect to people that's walking, right? But that's that broke, busted, and disgusted guy, or that broke, busted, and disgusted chick, right? You don't want to be around that. Neither do the credit people. So when it comes to credit inquiries, you want to get those removed and only apply strategically for credit, which I'm going to show you how to do in this course. All right. So I hope this gives you a clear future in terms of how your credit score is determined. Throughout this course, throughout the next 5 steps, I'm going to break down exactly how you can attack each one of these areas. Okay, it's going to work. However, you need to know how it all works for you ahead of time so you can know how to start playing those rules. All right. So I'm looking forward to connecting with you, and I will see you in the next video. Peace.